And Bitcoin is, because it's digital and because it's deflationary, it's got a half-life of forever, right? It's permanent, immortal capital. When you think of it that way, you think, well, what do I want to own? Well, I want to own perfect capital, perfect money. You're buying Bitcoin, you're buying the best thing. Every billionaire in the world go and buy $1 billion of Bitcoin, smash buy it overnight, and just to make $1 billion, because why wouldn't they just want to make the $1 billion? If AIs can trade Bitcoin with each other, when 1 billion AIs are trading with each other, they're not going to be trading buildings with each other. They're not going to be trading copper tokens or gold bars. They're not going to want to trade Apple or Amazon stock with each other. They're going to want to trade digital capital with each other. They're going to want to trade Bitcoin. What'll happen over the course of 20 or 30 years? Bitcoin will start to be just twice as good as everything else.
Saylor predicts that as Bitcoin's market capitalization grows to the size of the S&P 500, its performance might moderate to being twice as good as other assets, but it will always remain superior. Unlike physical real estate, art, equity, currency, or debt, Bitcoin lacks associated liabilities, making it a robust investment choice. According to Saylor, the logical investment strategy is to keep trading weaker assets for stronger ones, and currently, nothing outperforms Bitcoin. He argues that even if every billionaire decided to buy $1 billion worth of Bitcoin, the asset's performance would remain compelling. However, conventional patterns and conservative forces in the market slow down the adoption process. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Bitcoin is digital capital. And so once you understand capital is a store of value, it's economic energy. If I can store capital in digital form and I can move it between any of billions of computers or any of millions of companies, if I can move it at any frequency, if I can program it using the most sophisticated servers, if AIs can trade Bitcoin with each other, when 1 billion AIs are trading with each other, they're not going to be trading buildings with each other. They're not going to be trading copper tokens or gold bars. They're not going to want to trade Apple or Amazon stock with each other. They're going to want to trade digital capital with each other. They're going to want to trade Bitcoin. And Bitcoin is, because it's digital, and because it's deflationary, it's got a half-life of forever, right? It's permanent, immortal capital. So when you think of it that way, you think, well, what do I want to own? Well, I want to own perfect capital, perfect money. And if you look at it statistically, right, Bitcoin has been, for the last 4 years, it's returning 4 to 5x as much as the S&P index. And it's been 4 to 5x as volatile. And the reason it's volatile is because it's a free capital market. It's a global capital market, and anybody can express any sentiment anywhere in the world, any second of the day, as frequently as they like. And the reason it's high performance is because of its technical characteristics. So what'll happen? Over the course of 20 or 30 years, Bitcoin will start to be just twice as good as everything else. Bitcoin's 5 times as good as the next best thing right now, but maybe one day in 20 years or 30 years when Bitcoin is the size of the S&P 500, maybe it'll only be twice as good. But it's always going to be better because it's pure digital. It doesn't have the physical liabilities of physical real estate or physical property. It doesn't have the cultural liabilities of art. It doesn't have the corporate liabilities of equity. And it doesn't have the political liabilities of currency. And it doesn't have the credit risk of debt. So you're buying Bitcoin, you're buying the best thing. When should you buy something else? When something else is better, you should buy something else. But there isn't anything better. There isn't anything better now. There won't be anything better in the future. So the logical trade is you keep trading the weaker thing to buy the stronger thing. Every billionaire in the world go and buy $1 billion of Bitcoin, smash buy it overnight, and just to make $1 billion, because why wouldn't they just want to make the $1 billion, or $5 billion or $10 billion or any amount of money? I mean, Bitcoin, it feels like in the early days the infinite money glitch, right? But the practical case is the world falls into conventional patterns and conventional behaviors and ceremony and ritual. And there are a lot of forces of conservatism that cause institutions and companies to move slower. So for example, in the last 4 years, one question is, will Bitcoin be embraced by the regulators? And that wasn't really clearly answered until January of 2024. So when the United States SEC approved the Bitcoin spot ETFs, that was a major endorsement that this is not tulip bulbs, this is not a scam, this is a legitimate institutional digital asset and digital commodity. So that was a very important point. Another thing that had to happen was, for corporate adoption is fair value accounting. If you bought $1 million of Apple stock and it doubled, you would have $1 million investment gain. But if you bought $1 million of Bitcoin under the previous indefinite intangible accounting and it doubled, you would probably be showing a loss. So a CFO that's indifferent, if they said, well, wait, I can buy this, and if it doubles, I'll make money, and if I buy that and it doubles, it'll look like I lost money. That was, I would say, prejudicial, hostile accounting. And that only just changed this year.
Saylor identifies the integration of Bitcoin into the global banking system as the final piece for widespread institutional adoption. Currently, companies cannot easily purchase Bitcoin through their traditional banking partners like JP Morgan or Citigroup. This requires setting up new relationships and vendors, which can be cumbersome for large corporations accustomed to long-standing banking partnerships. Saylor anticipates that it will take another year or two for major banks to start offering Bitcoin custody services. Once this happens, it will become much easier for corporate treasurers to allocate funds to Bitcoin seamlessly, just as they do with other assets. This integration will be a game changer, removing the last significant barrier to institutional adoption.
And then the third thing that is required for institutional adoption in a big way is for the banking system of the world to start custodying Bitcoin, right? If I'm Google and I generate $1 billion a month, or maybe $1 billion a week some weeks, I have no problem wiring that money to JP Morgan or Citigroup and saying buy government T-bills, and a junior employee at Google does that wire transfer, and it's routine like this. But if I wanted to buy $1 billion of Bitcoin, I can't wire the money to JP Morgan or Goldman Sachs or Bank of America or Wells Fargo. I have to go find a new relationship. I have to set up a new vendor, right? And a lot of times these companies had the same bank for 20 years, 30 years. You know, now Citibank used to be National City Bank. National City Bank was the Rockefeller Bank. It was John D. Rockefeller's bank. Right? It's not unlikely that the oil companies have been doing business with the same bank for 100 years, right? So when we did it before those things. Right now, what we've seen is the ETFs have been an important green check in this process. The accounting changes have been a second green check. There's still a bit of a debate right now, a controversy in DC over whether banks should be able to custody Bitcoin. Because there's a rule the SEC has called SAB 121 that prevents banks from doing it. The House of Representatives and the Senate passed a bill revoking that rule. The White House vetoed the bill. And so there's a political debate there. I think at the point that you see the mega banks in the United States start to custody Bitcoin, the third leg of the stool will be put in place. And at that point, the treasurer of Microsoft could wake up in the morning and say, I think we should buy some Bitcoin. The CFO would say, okay, well, I guess the accounting looks fine. The lawyers, the general counsel would say, oh, well, the SEC's endorsed this, and there's 34 companies that have 34 ETFs with $70 billion of Bitcoin, so I guess it's a legitimate asset. And then the treasurer could say, okay, to the person at Citibank or JP Morgan, buy us $1 billion, put down the phone. And it's just very stress-free, you see. And right now, we're not quite there. And that's the negative. It'll probably be another year or 2 years before we work through the banking issue. It's clear that it's going to happen, but it'll take a bit of time. And meanwhile, the opportunity is for these companies you named to get a leg up. And if you're the first mover, you have to do more work. It's just like someone that bought Bitcoin in 2013 had to do a lot of work, or 2017. So you have to do more work, but you get paid. And what I used to say to people is, look, when it's not controversial and it's easy, right, everybody will want it, right? Nobody will make fun of you for buying it, but you won't be able to afford it. Like you'll be able to buy 1% of what you could buy now. So when it gets easy, you'll have to pay up for the convenience of it, or you can work a bit harder right now, and the marketplace will give you a discount.
Saylor encourages companies to act now and gain the early mover advantage. Those who invest in Bitcoin before it becomes mainstream will reap substantial rewards. Early adopters have to do more work, but they benefit from lower prices and less competition. By the time Bitcoin becomes a routine part of corporate treasury management, the opportunity to acquire it at favorable prices will have passed. Michael Saylor's insights paint a compelling picture of Bitcoin as the ultimate digital capital. Its unique properties, superior performance, and growing institutional acceptance position it as a transformative asset for the future. As regulatory frameworks evolve and banking systems integrate Bitcoin services, the path to widespread adoption becomes clearer. For those willing to navigate the current complexities, the rewards promise to be significant. Please like and subscribe my channel.